Hi everyone, very good evening and welcome back to Grade B. So today we have completed primary market and today we have secondary market. Okay, so the today's lecture will be a lecture on basics of secondary market, right? So we will be knowing about the various kinds of shares like equity and preference share. I did tell you in primary market, but I did not tell you in detail. So that is the thing that we are going to cover over here in this particular class. Okay, let's start. So we have secondary market. What does secondary market means? So first thing first, the markets are of two types. Market are of two types. One, we have primary market, and then we have secondary market. Okay. What does primary market, very good evening everyone. What does primary market mean to us? We have already seen. A transaction when happens between a company and an investor, that is called as a primary market. Okay. Transaction when happens between a company and investor, that is called as a primary market. Then we have secondary market. What does secondary market means to us? So when a transaction happens between investor and investor, we call it as secondary market. Okay. Now before starting with the lecture, I would like to know that how many participants of secondary market you guys know. Tell me, who all participates in the secondary market? Who all are the participants of the secondary market? बताइए. Quickly tell me who all are the participants of secondary market. Any rough idea will do. Any rough idea will do. So first of all, we have what? We have investors. Now investors, when I say investors, they could be anyone, right? They could be anyone. When we have talked about in the primary market, you have seen that an investor can be a retail investor, right? Retail investor means the person who is investing in the short amounts, right? He could be a retail investor. Yes. Apart from that, we can have corporate investors, right? We can have corporate investors. Apart from that, we also have the investors to whom we can call as QIBs. Yes, industrialists, qualified institutional buyers, you can say. So your pension funds, insurance funds, right? And apart from that, your mutual funds. That means any kind of fund, that is your venture capitalist, alternate investment funds, hedge funds, etc. There are so many. Fine. So whosoever is having the money to invest, we call them as investors. So number one thing, we have investor. Apart from that, the second main constituent, we have SEBI. SEBI obviously regulates stock market as a whole. Primary and capital market both are the part of your stock market. So SEBI is the regulator. Now tell me, can company also be there in the secondary market? Does company also there in the secondary market? The answer is yes. They can be there as an investor. Fine. Companies also can involve themselves in the sale and purchase of shares, right? So in that sense, the company can also be included in the secondary market, but not as an issuer, but as an investor. Are you getting the difference? Fine. So this is the thing that I wanted to tell you. Now let's talk about the secondary market as a whole. Yes. Let's look at it. So secondary market is a market where the shares are initially issued or traded. Fine. Where the market in which shares are initially issued, it is called as a primary market, right? We call it as a primary market. And once the shares have been issued, then in the market in which the shares are traded, that is called as the secondary market, right? After that, trading of securities takes place when the securities are purchased or sold. This market is known as stock market. In India, secondary market consists of recognized stock exchanges operating under rules, regulations and guidelines by the government. The stock exchanges are organized market where the securities issued by the companies, central, state government and public bodies are traded. Now I have a question. Do you guys understand the concept of a stock exchange? आपको स्टॉक एक्सचेंज का कॉन्सेप्ट समझ में आता है? Do you understand that means the concept of stock exchange? What is the work of stock exchange? Please reply in yes or no. Okay. What about others? So before we go further ahead, let's talk about first stock exchanges, right? So a very important constituent of your secondary market is the stock exchanges. What is a stock exchange? Just quickly telling you. See over here. So stock exchange, you can compare it with the car bazaar, right? Car bazaar, the place where the second hand cars are displayed for sale, right? So are these cars owned by car bazaar person? Are these cars owned by a car bazaar person? No, right? What the car bazaar is actually doing, car bazaar is just acting as a meeting place for the buyers and sellers. So what is a stock exchange? Stock exchange is just a meeting place for buyers and sellers, right? There is a person A and here is a person B. This person is sitting in Mumbai and this person is sitting somewhere in Kolkata, right? Still, they are becoming party to a contract. Okay, so this is A and B. These people are meeting, right? They are doing the contract among themselves, although they do not know each other personally. So that is what we call them as the this is the role of the stock exchange, right? So by trading, these people, they are able to enter into a contract among themselves. So what is a stock exchange? Stock exchange is a meeting place. Once we have understood stock exchange, now there comes the another thing, the another word. See, right now I am just telling you the basic functional understanding. Obviously, the theoretical parts, etc., we are going to study, but having a functional understanding always helps. So, we have what called as clearing corporations. Now, what is the role of these clearing corporations? So, every stock exchange, they themselves can also play a role of clearing corporation, or any other entity can also play the role of clearing corporation. So, both the things can exist. Either the stock exchange themselves, they are playing the role of clearing corporation. In such a case, function of stock exchange and functions of clearing corporation will be separate. Okay? Although the entity is one, but their functions as stock exchange and functions and clearing corporations will be different, right? Number one thing. Next thing is, if a stock exchange is on at their own, they are not acting as a clearing corporation, then they can employ any other entity as well, and that entity they can have the agreement with any other entity, and that entity can play the role of clearing corporation. Now what is the role of clearing corporation? I'll tell you. So there are two people, person A and person B. As I have told you, person A is sitting in Mumbai and person B is sitting in Kolkata, right? Both of them, they are doing contract with each other, right? Now understand, if this person B is a fraud, he is a fraud, then what kind of security is available to Mr. A? He does not know person B, right? If as a stock exchange, as a marketplace, we will allow such kind of fraudulent people, then nobody will invest in the stock exchanges, right? Understanding my point? So in such a case, what happens is, there is no direct contract between A and B. What do I mean to say? I mean to say, clearing corporation acts in between, okay? Or understand this like this. So stock exchange and clearing corporation, they are a middle party. So this person A is actually doing the contract with these, and this person B is actually doing the contract with these. So they act as a mediator, right? They act as a mediator. Now suppose Mr. A is buying securities. He is buying. So he has to pay cash, right? He has to pay cash. And Mr. B, he has to sell the securities. This is how transactions happen, right? Mr. B has to give the securities. Now, who will ensure that both of them shall fulfill their obligations? Okay, what do I mean to say? There should be a central party to the contract which shall ensure that both A and B are fulfilling their respective obligation. And this is the work of clearing corporation, right? This is the work of clearing corporation. Clearing corporation says that we are at the central, right? If Mr. A is not fulfilling his obligation, then the contract of Mr. B, right? This contract will be functional. There will be no impact on this part of contract, and whereas this part of contract will be nullified. Okay, so that means if Mr. A is doing something wrong, the impact of that thing will not come on Mr. B. And similarly, if Mr. B is doing something wrong, then impact of his wrong conduct will not come on Mr. A. Is this clear? अच्छा चलो, नाउ टेल मी हाउ वी विल इंश्योर, कैसे इंश्योर करें कि अगर इन्होंने कोई गलत काम किया है, इफ ही इज डूइंग समथिंग रॉन्ग, इफ ही इज डूइंग समथिंग fraudulent practice, or if he is backing out of the contract, then how shall we ensure that there is no loss to Mr. B? कैसे इंश्योर करेंगे ये बताइए? If anyone is having any sort of idea about it. किसी को भी? So there is something called as margin money. क्या बोलते हैं उसको? Margin money. There is something called as margin money. In other words, or in the normal words, you can also call it as a collateral. What we can call it as? Collateral. Fine. Money, margin money, collateral means, that means if you are interested in trading on stock exchange, अगर आप ट्रेड करने के लिए इंटरेस्टेड हो, then first you have to deposit certain margin money with the clearing corporation. आपको कुछ margin money देना पड़ेगा clearing corporation के साथ, so that in case if you are not able to fulfill your obligations, then that margin money can be forfeited. Is it clear? अभी समझ में आया? So this is the work of clearing corporation and the stock exchange. every stock exchange has a dedicated clearing corporation as well. Okay, now there are two more terms that we will come across. I'll explain those terms over here to you. See, these two terms are depository and the other word is custodian. Now I'll tell you just two differences. Fine, only two differences that you need to know among their function. So depository, what kind of work they do? See, earlier in the older times we used to have share certificates. ठीक है? Share certificates मतलब हमें physical form में share certificates दिए जाते थे. But now as scene have progressed and everything is into online format, so now the share ownership is also in the demat form, that means online format. Okay, so these depository, what they do is they maintain online data of security ownership. They have all the data, that who's the issuer, who is the current owner. If this ownership gets transferred, then they will automatically transfer it to the new owner. So what I am telling over here is depository maintains the online data for security ownership. If I have shares in my name, then in the depository's record my name will be there. Okay, TCS shares are held in the name of Sapna Chauhan, right? So this is how they will maintain a database. With depositories, we also have certain other members like depository participants, but I am not going to talk about them over here, right? Because we will talk about it as and when the topic will come. As of now, what you have to understand is does just the depository rule. Fine. Now talking about the custodian. So let's take an example for us. Suppose IIBX. So this is the bullion exchange that has opened. Bullion means the gold bars, bars of gold. Fine, सोने के biscuit. So for that there is an exchange, IIBX, right? India International Bullion Exchange, that has opened up. In that exchange, what is being traded on? Bullion biscuits or bullion bars that are being traded on. Okay, now obviously the trading is not happening in the physical bullion bars, right? Physical bullion में तो trading नहीं हो रही है. Bullion can be, see, bullion word represents precious metals. Okay, bullion word represents precious metals, not just gold, but it could be anything which is precious, like it could be a silver biscuit as well. So I'm just clarifying it because many of the times the students say, no ma'am, you did not tell completely. So when I'm telling you something, the point of telling is just to make you understand. So the bullion is not there in your course. I'm just giving you an example, right? So nevertheless, coming back to the example, so IIBX, they trade in the bullions. Now bullions is a precious commodity. Okay, bullion is a precious commodity. We need a vault. We need a safe place to keep secure the bullions. So here I am just giving the example. Custodian, they ensure physical security. They ensure physical security of the asset. जो भी asset रखी गई हो. Like here I am giving you the example of bullions. So if bullions are kept, needs to be kept secured, right? Anyone can come and anyone can take them. They are so precious. They have got high value. So I have to ensure their physical safety and security. So that is where custodians come into place, right? So this is the very basic difference that you need to understand between a depository and a custodian. Apart from that, one more thing is this. What is the other thing? So here depository, what they ensure, they have got beneficial ownership. Now I am not talking about original ownership, I am talking about beneficial ownership. Right? Beneficial ownership, that means owner is someone else, right? But I can have the benefit of it. Beneficial ownership, that means you can term it as a secondary ownership in form. Okay, whereas custodian does not have any sort of ownership rights. No ownership rights, they are just there to ensure the physical safety, nothing else than that. So these are the two differences that we have between the depositories as well as the custodians. Okay. Okay. So now we have understood the basic components of a secondary market, right? I have told you depositories, custodians, as well as stock exchanges, clearing corporation, all of it. Now let's talk about the few things over here. As per the Security Contract Regulation Act 1956, it means anybody of individuals, whether incorporated or not, constituted for the purpose of assisting, regulating, controlling the business of buying, selling or dealing in securities. So this is a bigger definition, like in the movie Three Idiots, they say that what is a machine. So simple functional meaning of a stock exchange means it is a meeting place for the buyers and sellers. Now you can give a big and broad definition to it as well, and this is the same definition that we are looking at. So buying, selling or dealing in securities, any individual incorporated, any body of individuals, whether incorporated or not, that means whether you are in a company format or not, if you have opened this kind of meeting place, that will be called as the stock exchange. Now securities issued by a company for the first time, they are offered to the public in the primary market. Once the IPO is done and the stock is listed, they are traded in the secondary market. So therefore there is a limitation that you have to list the securities onto the stock exchange within a limited period of time. Why? Because we want to provide our investors with a liquidity. कि अगर आपने एक बार शेयर्स खरीद लिए हैं तो ऐसा नहीं है कि आप बंद गए हैं. You can trade them as many times as you want. ठीक. Now next thing is equity shares, bonds, preference shares, debentures. These are some key products that are available in the secondary market. Fine. Regulator of secondary market in India, who's that? So Securities and Exchange Board of India, that we already know. Now what are the functions of the secondary market? Let's just see this, right, one by one. So number one, we have economic indicator. What does economic indicator means? Every major change in the economy, either due to the government policy or any major international event, has a bearing on the secondary or stock market. We have already seen that, right? Whether it was the case of an American bank crushing down, or it was just a report on one entity, can have a bearing on the stock market as a whole. Fine. Just a war between two nations who are not even our neighbors can have an impact on the stock market. You all know what I'm talking about. Fine. So any incident, any event, be it just a simple event like election of a president of America, right? Now whether he is from Democrats or whether he is from Republican, so this also impacts the stock market. So this is how our stock markets work. Now next is the valuation of securities. See, stock markets works on sentiments. Sentiments मतलब आपको कैसा लग रहा है, बहुत सारे लोगों को कैसा लग रहा है. If many people think that going forward the prices of stocks are going to increase, then they will actually increase. Why? Because of the mass action. Everybody would start buying and the prices will increase. If there are certain rumors about anything, right? If you are thinking that yes, the stock market will not do well, if there is just a little bit of rumor, then everybody would start acting on it and actually stock market will not do well. So it just works on the sentiments and as well as the thinking of the investors. After that, we have valuation of securities. So secondary market helps in the valuation of securities through its demand and supply. the securities of those companies which are growth oriented and doing well will surely have a higher demand in the comparison to the companies which are not doing well. Valuation of securities, see, you guys have understood the primary market thing, right, along with me. So in the primary market we have seen that there are two formats of finding out the price of security. One is the fixed price, another one is the book building, right? Both of them are there. Under the fixed price, the company itself decides that at what price it should issue the shares. कंपनी खुद डिसाइड करती है कि हमारे शेयर का प्राइस 500 रुपए होगा, 600 रुपए होगा, 100 रुपए होगा, 10 रुपए होगा, जो भी होगा, company decides that whether our shares price will be 10, 100, 150, 200 or whatever is the case. Fine. But as soon as you are listed in the stock exchange, then comes your true valuation. Public क्या सोचती है आपके बारे में? What does public thinks about you? So that is when the true picture of your valuation comes in. Public, through demand and supply, they decide that okay, what should be the price, what is going to be the price of your shares. And in relation to that, we have already understood a mechanism that is called as a green shoe option, if you understand that. Okay, we talked about that in detail. So that is just a tool just after IPO. IPO लाने के बाद में या FPO लाने के बाद में, if you want to ensure a stability the prices of your securities, then that is called as the green shoe option, and that is how you can stabilize, but not for a longer term. For a longer term, this is the public which is going to decide that what is going to be the valuation for your say shares and securities. Great. Now after that, transactions in securities is safe in the secondary market. Why it is going to be the safe? So because all the trading taking place in electronic system which is highly secure, and apart from that, if there is even an iota of problem, then SEBI is there. Obviously sometimes there are some issues where SEBI was not on its toes. That means it was not able to discover the problem in time, but yes, it does take the decisions on two problems, right? It does rectifies the mistake and everything. Next is the motivating people to invest in the equity shares. Efficient secondary market motivates people to invest in the securities market. Reason is people would be less apprehensive about the riskiness of the stock market. See, the better your stock market is, the better the investments will be, because people will be happy to invest if your stock market is not secure. Like I have told you the work of clearing corporation. What kind of work clearing corporation has? So it ensures that the trading happens in a what you can say safe and secure manner. The what you can say the I'm just forgetting the word. The trust of investors remains assured. Okay. Now that there is a development of the stock market, not very important, but just a factual data that Bombay first the stock exchange that was there in India was Bombay Stock Exchange. It was formulated in the 1875. After that, obviously, because Bombay was the hub of the colonial administration, so that is why the stock exchange is there. After that, we also came up the reforms of 1991, that means the LPG reform. It brought us to the NSE, over the counter exchange, interconnected stock exchanges, etc. NSE, it was set up in the 1994. After that, Metropolitan Stock Exchange, formerly known as the MCA Stock Exchange, right? So all such kind of segments came for the different markets. There will be detail onto it, but although this is not just very really important, we just have to know about the two, that means NSE and BSE. Anything else that has been important that we'll already come to know. One more thing, there was a forward market commission. So forward market commission was merged with the SEBI, right? Why forward market commission was there? So it was there for the commodities market. After that, share trading in the secondary market. So there are two kinds of shares capital in a company: equity share capital and preference share capital. We did talk about it in detail, right? Equity share capital, all share capital not falling with the preference capital description. मतलब जो preference capital नहीं है वो हमारे लिए क्या है? Equity capital. Equity capital, why it is important? First of all, this is a drawback that there is no guaranteed amount of dividend. Dividend की कोई guarantee नहीं है. But we have a plus point as well, that they carry voting rights, right? Fixed percentage of dividend nahi hai, but whatever surplus will be there, it will belong to equity shareholders. Now equity shareholders, they are the real owners of the company. Okay, when the company prospers, they gain the most, and if company is not doing well, then they are the ones who lose the most. So whether it is profit or it is risk, both are at peak for the equity shareholders. प्रॉफिट होगा तो भी इनके लिए बहुत बढ़िया, और अगर प्रॉफिट नहीं होगा, लॉस हो रहा है, देन इनके लिए तो बहुत नुकसान है. करेक्ट. They cannot claim dividend as a matter of right. Dividend is a right for preference shareholders. Preference shareholders बोलेंगे we want fixed rate of dividend every year. That is their right. But equity shareholders, they do not have any such kind of right. Okay. Dividend is paid to them only when there are surplus profit, and rate is also decided by the board of directors. Acha, capital, equity share capital will be repaid when the company buys back its shares, or there is a scheme of reduction, or the company is going into the liquidation. या तो company बंद होने वाली हो, number one. Okay, if company is going into liquidation, then obviously equity share capital will be repaid. Number point two, company has got so much cash, right? Company has earned so much cash, and now it wants that these too many numbers of owners, we want to reduce them. Suppose right now there are 50 people who are the owners. So what the other people will think, that means the 10 who are the largest shareholders, they will think that let's give 20 people their money back. Okay, this is called as buyback of shares, and this is done at the price which is decided, and generally it is higher than the market value. If the market price of the share is 100 rupees, then these shareholders, that means the owners, real owners, they will pay 150 to other shareholders कि आप ये पैसे ले लो, take these 150 rupees which is higher than the market price, and just go away, go your home. Why? Because this will reduce the control, this will increase their control, because there will be reduction in the shareholders. So for existing shareholders, it will increase their control. After that, we have preference share capital. With our preference share capital, we have already read about, there are two rights for them. Number one right, they have got dividend as a matter of right. Correct. They will receive fixed rate of dividend, and apart from that, they will also have the repayment of the capital at after a fixed interval. That means once maturity arises, and such repayment will happen before equity share capital. That means इससे पहले कि आप कोई पैसा इक्विटी शेयर होल्डर्स को दो, यू हैव टू गिव द मनी टू द प्रेफरेंस शेयर होल्डर्स, राइट? बिफोर यू पे एनीथिंग टू द इक्विटी शेयर होल्डर्स, यू हैव टू पे समथिंग, you have to pay the whole amount to the preference shareholders. So whenever repayment is being done, first to preference shareholders, then to equity shareholders. Okay, so right now for today I am going to keep this much only. From Monday onwards, we will increase the class timings, because there is a lot to cover and we are certainly behind. But right now, due to some situation, I have to close the class at this particular point. I hope you understand, and thank you so much for joining in.